right, ladies and gentlemen. We chat a little bit now. So I invite Peter Bossek from Erste Bank Österreich to join me here on the stage. Adi. Jolly good. Ja, dann können wir weg. Thomas?
You can't hear me now.
Ist das aktiv? Okay, excellent, excellent. So we've heard in the morning that you are effectively a growth play, right?
Yeah.
But I had the decency actually to put a question mark around it, because when I talk to investors, usually the first thing they throw at me when we talk about Austria is cost cutting. Yeah, your cost-income ratio is too high and all this kind of stuff. We'll have to come to that. I can't spare you that, even so we discussed it a little bit in the morning. But first, let's talk about your achievements in terms of volume growth, in terms of market share growth. I think you have a great story on the corporate side, but also on the retail side. Maybe you can tell us a little bit more on how your client growth has developed. Maybe build on that, what we discussed in the morning. And yeah.
Maybe the most important point, I never disagree with Andreas.
Yeah.
No, I think what he already mentioned is that we were quite happy to be able to build up a brand in this country who is feeding in all the kind of core beliefs we have in place. We were super happy to succeed with George. And I think we have this growth DNA in this country because before Andreas joined this group, this bank was in Austria quite a small bank. When I took over retail, we had 500,000 clients. That's more or less a region of Czech. So it was always completely clear retail is a scale business, so we have to increase number of clients. And we have very well-educated employees in the branch network, and we always had this holistic understanding of retail business that you have to add innovation, brand, education, and all this stuff together on the same plate. I think that's the reason why we succeeded.
Okay, let's move to the next one of the three questions. I think if you look at the profit development of the bank, and if you also look at the fee development, I think was also quite good. I mean, as we heard in the morning, George probably played a very significant role in that, but maybe you can expand a little bit, because it's remarkable, I think, in the Austrian market, where everybody knows it's very tight in terms of margins, etc. And it's a Eurozone country with the low to negative interest rates. Maybe you can tell us a little bit more what George helped you to achieve.
Yeah, I mean, given the margin environment in Austria, we always were clear that we have to increase fee income. So compared to the group, where we have roughly 30% of the overall revenues in terms of fee income, you've seen it in the presentation of Bernd at the beginning, we are roughly 8-9 percentage points higher in Austria. But if you have mortgage loans and consumer loans with much lower margins compared to Czech Republic and Slovakia, it absolutely makes sense in terms of capital efficiency to have a stronger focus on fee income. We have a long tradition in terms of asset management. We are okay-ish in bank insurance. I think there is a lot of room for improvement in the area of bank insurance. And what Stefan, in his former position, together with his board colleagues in Austria, succeeded was to leverage this George environment, because I think it's really outstanding that we are now, in terms of fee income in the insurance business and the payments area, on the same level. So that's reflecting to your question before. There are some kind of environments where you're even able to increase fee income in the payments area, and I think together with asset management and bank insurance, that should be the major sources of income in the future.
Excellent. Now we can't dodge the white elephant any longer. I think we have to talk a little, at least a little bit about costs. Right. I mean, we heard in the morning that we want to achieve a cost-income ratio on the group level of 55% by 2024. I mean, we also heard that you will have to contribute, of course. What are your plans? What do you hope to achieve in the next couple of years?
I think there was a huge change in our own understanding over the last weeks, because given the last decisions of EZB, it's quite clear that this interest rate environment is more or less here to stay. So I think it's absolutely necessary to come up with a completely different view in some areas. And I think the big task will be to change an Austrian mindset in a kind of private equity mindset. I think we have, as already was mentioned by Ara and David, a lot of room for improvement in the operations area. From a technological point of view, we are maybe in the late 80s, which should be over the next 24, 36 months, somehow low-hanging fruits, coming up with end-to-end processes, which is only possible because we do this kind of modernization in our IT environment, as also was mentioned by David, Ara, and Bernd. So operations / back office / how we work together in the IT environment should be one of the major sources of having the possibility of bringing down the costs. What we also already started now is a kind of alignment in the corporate area between the division of Ingo on holding level and the division of Village Janko in Erste Bank Austria. We are doing the same exercise in risk management, and we are also doing the same exercise in terms of IT, demand management, and a lot of things to follow.
Excellent. Thank you very much, Peter. And I would ask Thomas Salomon from the Czech Republic to join me for a couple of questions. So Thomas, it's great to have you here. You're coming from a country that all investors love. You know, when you talk Czech Republic, everybody gets watery eyes almost, I'm tempted to say. You've got everything. You've got the volume growth, you've got interest rates, you've got a fantastic economy. Maybe let's talk a little bit about that, and maybe you can tell us a little bit about how Česká is doing in terms of market share development and in terms actually of market leadership development.
Right, thank you, Thomas. Good afternoon, everyone. For those who do not know me, I am Thomas Salomon, CEO of Česká, and I have to tell you we are glad to be part of this island of positive deviation within Europe, which is called Czech Republic. We do enjoy that, but I want to assure you that behind the sustainable and consistent results which are delivered by Česká is a hard execution and bit of strategy and the thinking that we know from where to where we are going. But let me give you some insights. Why do I believe it is sustainable for the future as well? First of all, I think we are well positioned within the market. You may see the loan to deposit ratio, so from liquidity point of view, as well as risk cost point of view, as well as our market position, we are ready to leverage and grow faster than the market. We proved that we are able to grow faster than the market, and I'd like just to raise your attention that it wasn't always like this. As the banking market within a Czech Republic is juicy, it attracted 5-6 years ago the attention of newcomers, which were pretty aggressive within their pricing, and we found ourselves for a couple of years within a defensive position. It's not true anymore. We are again the self-confident market leader, and we are growing our market shares and in both, in retail and corporate, and we are growing faster than market, and we are market leader within most of the important product categories. I specifically like the situation that we are much better diversified and balanced. We became 3 years ago the corporate lender #1. which wasn't the case in the previous times. Positelna was always known as a retail bank, but now we are number one corporate leader, and there is a second piece of diversity in that, because it wasn't because of a couple of big deals. Yeah, it's driven by SME strategy, and I think it is pretty consistent with the group strategy. So we are really glad for that, and we are committed to grow faster than the market in the future as well. So I hope this will stay.
Good. Let's talk a little bit about the economy, because this is clearly one of the biggest advantages that you have on your hands. I think growth was quite good over the last couple of years, and it's now slowing down maybe a little bit from high levels. And maybe we can talk a little bit about that, and maybe you can highlight some of the maybe little-known facts about the Czech economy in terms of diversity, etc.
I think it's true, and it's driven by the pretty prudent fiscal policy, because the depth of the economy within the Czech Republic, if I know from 2015 to 2018, was on average 1.4%, and it's extraordinary within Europe. So it's very good. So sound economic balances. And we are, and this is the whole story of today's session, we are converging and picking up the growth of the GDP per capita, and we reached the level of Spain. We are already above Portugal, and we are continue to grow, and that would be good. But everyone knows that there is almost zero unemployment, and we are the leader within Europe. Everyone knows. I like to highlight the different aspects of that, because within 3 years back, I heard from our corporate clients, we are not ready to invest because we do not have people who will operate the new lines and things like that. Now I do hear that they are investing into technology and automatization, so it helps to restructure the economy a bit. So there is always two sides of the coin, you may see, and I'd like to highlight a couple of things which are not so well known. Yeah, the Czech economy is within a top 10 from the economic complexity measured by MIT and Harvard Research. The first one is Japan, fourth one I guess is Germany, seventh is US. Czech economy is number 9 within a worldwide. And 14% of our GDP is driven by high tech. We are top 5 within Europe. So if you will hear that it's purely driven by automotive or it's linked to Germany only, this is actually not the case. Yeah. So I think there is a substance where we can, and of course we are having a healthy banking sector, thanks God, and we are part of that proudly. And top 10 within safety within the world. So I think this all just confirms that we are really living within the right place, and we are ready to help not only Czech economy, but as well as Erste Group and yourself to make other profits.
That sounds very positive.
Yeah.
Let's go for the final question now. And I mean, we heard in the morning from Andreas about financial health, and we heard it a couple of times later as well. And you even want to turn into financial health company. So it would be interesting to hear what's behind the concept. We heard a little bit already about it, but maybe how are you going to approach it, and what benefits do you expect, or why do you do it, I guess would be my question.
Look, I love Andreas's visions. That's the first thing, and I just want to make a couple of points to let you understand that we are already on our way. Yeah, we started 3 years ago to restructure Česká spořitelna, and I'd like to introduce to you how we think about it. Yeah. The first layer is about value proposition for our customers. There was a question regarding George and the ability to sell within a George. And as we are moving from the traditional banking house into a financial health company, we can call it, there is a difference, significant. Other than selling the commodities and be part of the commodity market and compete with the price, we'd like to much better, through the data, understand the customer journey. So it is not about selling loan, because none of you will wake up within the morning and saying, you know, what a nice day, I will take a loan. There is always an underlying need, and we want to understand if you are looking for a new car, if you are searching bigger flat, what is your problem? What are you solving? And that's exactly where we go. We do believe that this would be our long-term competitive advantage because it's not easy to copy. Right? So from value proposition point of view, it's clear for us, and we already tested it with My Healthy program within the Czech Republic, and it clicks, yeah? So it's helping us to primarize the customers. Second layer then, it's distribution. How you get your value proposition to your customer. And here we do believe within a combination of so-called click and face. And we do believe that emotions and physical contact is irreplaceable. Of course, the branches will look differently. And by the way, we reduced our number of branches by 20% within the last 3 years. And you did not recognize it through the results. Yeah? So we are moving as we go and adapting. And George will help us with the digital piece of that. That's why Mauri showed you how we will deal with the investments or with the savings handling. However, this is purely as an example, and believe me, you know, the loans are part of that. If you will understand through the transactions and through the data you have where customer is within a life cycle, you then may be more relevant and more sticky. And that's exactly what showed up within the last couple of months and years. Last layer is organizational one, and that's what we are running as a transformation of Česka. Good news for you as an investors, we are self-funding that, all right? So we are keeping our costs for last 10 years almost flat, and we are growing faster the market. This is the jaws Bernd talked about in the beginning. So we do believe that with the transformation, organizing the smaller teams, autonomous ones and end-to-end ones around the customer journey about the pain points and gain points of our customers, that's the way to go. A lot of execution, but believe me or not, you know, the execution takes place within the countries. Thank you.
Thank you so much. And now I would ask Peter Krutil to join me from Slovakia. So Peter, another exciting country, Slovakia. I mean, not as famous as the Czech Republic maybe, but still very exciting things happening there.
But I like Slovakia.
No, I bet you do. I bet you do. Now let's start with the economy. Maybe I think very good story as well. Very similar to Czech Republic, unsurprisingly. Maybe you can highlight a couple of things that happened. You have a great improvement in the labor market. You have the growth differential like all CE countries versus Western Europe. Tell us a little bit how you see things developing and what prospects you see in the near future.
Yeah, first of all, thank you very much having a chance to talk to you and being here with you after a long time, and having also chance to share a few words about Slovakia. Some people saying this is the younger brother of Czech Republic, which means what Tomáš said, everything is true, but we are a little bit more smaller, and sometimes maybe things are not working as nice as in Czech Republic as we see in last days, week. Concerning economy, Slovakia outperformed European Union average for sure in last 18 years out of 20 years. This is what you can find in the figures. This is reality, and of course it's due to the fact that in 2004 Slovakia joined European Union. This was the main milestone in this story when Slovakia become more attractive, especially for old European Union. We receive a lot of capital flow, we receive a lot of know-how. We see from 2004 also efficiency is growing, and also competitiveness of the economy is growing, and I'm sure based on this fact, and as we accumulate these resources in these times, we have still good overlook, or we have a good future also to outperform European Union average in next years. What I see as a positive is unemployment. Always, if we discuss about Slovakia, we had quite high unemployment rate, and I think I can say the similar words as Tomáš used. In Slovakia, almost everyone who is willing to go to work can find something for doing business, for job. Only those who are not willing to join the labor market are in figures which you have in front of you. Another positive information which I think it will make you more happy is the Slovenska take part of this convergence story of Slovakia. If you take in 2001, when Erste Bank bought Slovenska, the banking sector, the size of the banking sector or balance sheet on the loan side, we had something like 13 billion euros. At the moment, it's 65 billion euros, which means the banking sector grew by 5 times. In last 20 years, Slovenska grew by 7 times, which is showing how Slovenska is not only enjoying the above the average performance of the Slovenska against European Union, but even inside of this quite good market performance, Slovenska is taking the bigger part. And I think this is what you can see also in our figures.
Excellent. Let's move to Slovenska maybe a little bit. I mean, obviously Slovakia is part of the Eurozone since 2009, if I'm correct.
Yeah, first we were happy, now we are not so happy.
Yes. So first you were happy and now you have the low interest rates, but that's what you deserve, yeah?
Yeah.
So there you go.
Yeah.
And I mean, obviously you had fantastic loan growth also that came with the low rate.
Now we are happy, let's see.
And I mean, obviously we have talked about in the morning about fee growth and how important it is, and you have already made some good progress in that to basically go more for fee growth than for NII growth. I mean, tell us what further growth opportunities you see in the next couple of years in this respect.
Yes, you're right. We in the board and also in the bank, we discuss a lot what's good for our clients in such market conditions as we have, and what's good also for the bank, because you have to find some balance between two things. And I think the good things are sometimes becoming truth if you have to do something. And based on the fact that NII, we are under pressure, and we agreed that there are 2 areas where we will focus. One is bank insurance. As you can see, we already started in year 2017, and these activities already materialized in figures in 2018. Why we decided for bank insurance? There are 2 reasons. I think at this time it's very good to start sell to our clients insurance, because in more volatile time it's good if we have clients who are hedged against the high volatility. This is point 1. And point 2, as we looked on insurance market as such, our evaluation is that the insurance market in Slovakia has value approximately 420 million euros. If you look on our market shares, we said, okay, at that time you can see we took out of the market approximately 10 million euros. We said, okay, 20 plus market share, it's nice potential for fee income. And as you can see, we focus on bank insurance, and as we introduce bank insurance also in the George, which is proved the George is not only service provided, but also it's possible sell products. And as you implement in George, as we implemented in George, the bank insurance, you can see the figures are growing quite reasonably, and I'm sure also in next year we will see increase on fee side in bank insurance. Asset management, it's different. I think a lot of people will discuss about the euro area and how low interest rates on euros eating, let's say, the inflation is eating value of our clients. And as you see in Slovakia, the household are still really heavily under the, not only European average, but even below the Visegrad countries average. And we strongly believe, and this is what also Andreas Streichel mentioned today in Czech newspaper, clients have to take more risk to achieve higher interest income on their deposits, not deposit, but in this case in asset management. And this is the reason why we are doing the similar action as we did in bank assurance, and in these days we already launched pilot also in George. Our clients can use George for buying asset management product and some investment product. I'm saying not structured investment product, only investment product and asset management. And therefore, I'm quite optimistic if we will combine our branch network, our market conditions, and at the same time support or this cooperation through George. This is the way how we can achieve quite reasonable increase on fee income also in asset management. At the same time, I think it will increase also the efficiency and also happiness of our clients.
Excellent. Now you have even answered the third question already, but let's return to George and digital, because obviously there is some cost savings attached to this as well. I mean, you have George, I don't know, for 1 or 2 years now.
It's exactly, the official launch of the George was the first day I was acting as a CEO of the bank. It means 1st January 2017.
Okay.
18, sorry. This was, I dreamed it will happen in 17, but it happens in 18, sorry.
All right. I think you were also one of the front runners in terms of digital sales, in terms of consumer loans within the group. Maybe you can talk a little bit about that, and also in terms of introducing tablets into branches. What are your experiences in this respect? Maybe you can add a little bit.
Okay. I think a lot of people in these days is discussing about digital, and always if you are talking about digital, devil is in small things. And I think for us the George tablets are working together because we are trying to optimize this managing omni-channel flow of information. And as already I think Peter Bosek discussed and Mauri, the main issue is how you are then using this data from clients for clients and also for your sales purposes. But back to the George. In 2 years, Slovenska become #1 digital bank in Slovakia. We have at the moment more than 700,000 users in George, and out of 700,000 users, 420,000 users are using apps. Why I'm saying this? As Mauri mentioned, we have chance every second day talk to our clients, because really they are using every second day at least the George app. And this is the one small thing which differentiate us from others. If I'm now looking at you, okay, you have 420, the next bank behind us is 330,000. And we achieved this in 2 years. And as George, as we have such utilization on the George side, and at the same time we have tablets in every branch, it helping us keep the whole sales procedure. It means keep our sales forces. We can keep quality of services. Our sales procedure is it has high quality, because you can manage and you can even check. And at the same time, it helps us in areas where you have higher fluctuations of sales forces, start much sooner use people in branches for selling of products, because the tablet helping them provide the whole sales procedure with the clients. And last but not least, as you already mentioned, there are also small savings in this area. All these measures we took in last years help us decrease costs by 12 million euros. And what we know now, in next 5 years, we will decrease costs by another 8 million, which means we can say the digitalization till now help us decrease costs by 20 million euros yearly, which is I think not bad, and helping us keep to be the most efficient bank on the market. But this is not the main target. Main target is that I'm more than happy that Slovenska is in the last 5 years top 3 bank in client satisfaction. At the same time, we are in the last 3 years the top employer, because people are willing to work in the company, which is offering not only reasonable, let's say, economical support, but also they are doing on things which are sexy in the moment, which means it's digital. And last but not least, I think we proved that we are the most profitable bank on the market and the market leader.
Thank you, Peter. Thank you. I would ask you to stay here on the stage because we do a small round of Q&A for Austria, Czech Republic, and Slovakia. So I would ask the colleagues, Peter Bosek and Thomas Salomon, if he's around, to come back.
I can ask for Thomas questions.
Yeah, we figured out it's anyway almost the same, so it's all right.
I worked with him for 2 years. I know approximately what he will say.
Können wir den Dings wieder aufstellen? Okay. Well, Thomas thought it's over already. No, it's not. But I think we can start with questions for the Peters.
About Czech Republic.
Yeah. So please.
Thanks. In Austria, how do you manage the dilemma, if you like, between digitalization, saving costs, and the customer relationship? Even though, yes, it's increasingly digital, but you've probably got quite a hard task in terms of there's some growth, but it's not that great. You've got too many costs. A lot of those costs are people costs. And at the same time, you need to motivate people to be more advisory and so on. So, if you look, say, ahead 5 years, what will be the role of the branch employees? How much of the cross-selling will be done via George? What do you see the sort of the model of the Austrian branch? And combined with George to be on 5 years hence? That would be what I'd like to understand, because you're saying you're addressing the cost base, but it's still about customer acquisition and so on. That would be an interesting one. And then I think the second question would be, in Slovakia, if you're now testing bringing sort of tablets into branches, you almost sort of think, well, there are markets in Europe where bank tellers or bank advice, branch people do everything with a tablet. I mean, already. And I just sort of wondered, why? Are you the pioneer? Why hasn't everybody got a tablet? And why isn't everybody walking around with a copy of a digital copy of George when the client comes in the branch? So I wonder how you feel that the take-up is, and how you're getting more people online through things like branch education and so on. Thanks.
Maybe I can start with the Austrian business model in terms of branch network advisors. Maybe I can start with the first question in terms of Austria business model, branch network, or everything you addressed. Point number one, which is from my perspective very important, that's nothing new to us. We are in this kind of transformation since several years. We have reduced the branch network in Austria. When I took it over, we had 160 branches. Now we have roughly 85. Beside that, we doubled the number of clients. We nearly have no tellers in our branch network, and we changed the way how we educate our advisors in the branch network several years ago. And I completely agree that's not any kind of initiative where you begin and then you're ready after 12 months. So you have to change it on a regular basis. And there will be definitely some changes in the way of education over the next 36 months. In terms of cost base, from my perspective, we are quite efficient, so to say, in the branch network. Maybe we will close down another 5 to 10 branches, but I will decide it on the way, so to say. That what I meant before was that it's completely clear that we have a relatively high potential of cost reduction in the operations area. And that's something I'm absolutely able to tackle together with the savings banks. And I think I already mentioned it. In this way, the savings banks are definitely not the burden. They share the same view. They are completely clear that this interest rate environment is here to stay and that we have together come up with some efforts to reduce the costs. And in terms of gaining new clients and building up relationships, it's about branding and about politeness in the branch network, and it's about know-how in the branch network, and it is a combination between digital and so to say physical environment. And I think that's true for the whole group. That's not only related to Austria. That's one of our major competitive advantages. We will never be a pure digital bank. Even if we would enter another country, we would come up with some branches there. Because we have the strong belief clients in the retail area love this combination. I don't have the strong belief that somebody decides for N26 because they don't have branches. No. They're offering a lot of things for free. That's the reason why people decide for N26. But having no branches is not per se an advantage.
Hello, Judah Schuch from Mituba Capital. I have a question in regards to the bank assurance. I've been hearing over and over you want to get more active there. You mentioned that you renegotiated an agreement in Austria with Vienna Insurance Group. That was
true for the whole group.
For the whole group. Can you quantify a little bit more what that means and how much you get out of that? And will that in the future then also maybe lead to an equity investment of VIG into Erste Group? And what are you doing in the countries where you're not present but VIG is present?
Right now, one last question. What do we do in the countries where VIG is not present? We do nothing.
But I mean, would it be a reason for you because of your very strong cooperation you have with VIG to maybe then think to become active in such a country as well?
I think that must make sense for both sides in this cooperation. I think VIG is also in countries where I think we never will think about to enter. So only because VIG is there, it doesn't make sense. There must be some rationale for us behind. Otherwise, we would not try to make up our mind. In terms of further development of fee income, that's part of the budgets you've seen in the presentation of Stefan Dörfler. So the increase in fee income is mainly related to bank assurance and asset management, because as mentioned in the morning, payment fees are in the most countries okay, in some countries increasing and going a little bit down in the Czech Republic. So the increase you see, if I remember correctly, 4.6% average per year, are related to bank assurance and asset management.
Okay, thank you.
Hi, I have two questions, please. Firstly, on the property markets. How do you see the state of the property markets in each of your individual countries? In some of them, the regulators have been flagging a potential overheating. What's your take, and how is this influencing your mortgage lending? And the second one is on the car industry. We had a useful overview from the CRO in the presentation this morning, but it would be interesting to hear your thoughts on the developments in the car industry. How has your approach changed towards this segment over the last year, if at all?
Okay, I will start. I understand. Okay, I will. Property. If I understand you, you are referring to these DTI limitations from our central banks. This is the main direction in your question, yeah? Okay. From my point of view, in Slovakia, for sure, it's not because of development in property market. It's more about development of increase of loan portfolio in last 5 years. You have to take in consideration Slovakia grew by double digit in last 5 years, which central bank somehow takes attention on this growth, and they are asking if the leverage of people is not too quick. This is the main reason why they are looking on and why they are taking in this measure. And by the way, those measures are not very, let's say, they are not very tough. I have to say, if I take in consideration in Ireland you have 3.5 DTI. And they took measure with 8 DTI. I don't know if this is still something what can limit you in your healthy business. And as a second part of your question, at the moment, what we see the property market is growing due to the fact that there is higher demand than supply still. And this is valid not only for our Bratislava, which is the largest city, but it's even valid also for rest of Slovakia. At the moment, I don't see any signs of overheating of the market, and the actions taken by central banks are more focused on this. If the market is growing healthy in last 5 years, and they are somehow trying to keep under control this growth. This is about property. I don't know. We will.
Yeah, I can add to that. I think the underlying need I talked about, will be there. People would like to live somewhere. The prices for properties, especially within Prague, are rather driven up by the not enough supply. The demand is there and the supply is not there, which will be fixed. The growth of the entire market with housing loans was regulated a year ago by a Czech National Bank, implementing and asking us to keep the DTI, DSTI and loan to value ratios. The overall market dropped by 15%. However, it's picking up, and many of those loans were took within the last quarter last year. So we see the pickup. And last but not least, and this is probably the most important argument, the penetration of housing loans within the Czech Republic is still around, if I am not misleading, 24%, as opposed to average of the European Union, which is 38%. So we see the opportunity to grow. It will come sooner or later, and we are within a leading position. We know already that within 2021, we will be in the stock of our housing loans #1 within the market, because we implemented the 8 and 10 years fixation. So we do not worry about it. We just want to keep serving our customers, and with the convergence, the volumes will come, and we will keep our margins as they are. But the issue of the property as such, I see really within a not enough supply rather than demand piece. Yeah.
Maybe last part of Austria. Valuations are also quite high. Till now, National Bank didn't take any kind of action. There is the beginning of a discussion if they should take some actions. From my perspective, we are not facing any problem with it because we are not volume driven. Given the relatively low margin in this country, we are not volume driven, and so. Don't get me wrong, but if I lose 1% market share in the mortgage area, it's not a disaster. Because we have anyhow a much stronger focus on fee income.
And now maybe I will start the second round, automotive. As a country where is produced, I think, the largest number of cars out of these three countries. Even if I look on Slovak figures, because of course what Alexandra presented today, the part of these figures is Slovakia, and Slovakia is not outperforming those figures Alexandra presented, which I think 6% on retail side, and the corporate exposure is really not very high. From this point of view, I don't see big risk on our side, and we don't see any signs of slowdown, on the retail side or corporate side. This is point one, and point two, I have to say we have quite well balanced portfolio on the retail side and also on the corporate side, even if we will see some slowdown. And in Slovakia, I have to say, if you are talking to people from automotive, they are not as negative as you can read in newspaper. This is what we discussed also yesterday. Of course, I am very careful and looking every month on figures if this will come, or we are lucky because our especially the car companies are the new ones in Europe, and usually the car producers, maybe they are starting with older facilities, and for us it's very important to be careful, and we are really carefully watching what's going on in this area, having in mind the Slovakia is a little bit more, let's say, is overweight in car industry as such.
Look, we are watching the concentration on a corporate side very closely. Alexandra talked about it. I do not worry about it. It's we are growing through SME lending rather than concentrated within a couple of companies as well. It is necessary to be watched, but I don't worry. On the retail side, it is interesting because it's concentrated to a couple of cities where the big automotive companies are, like Mladá Boleslav, for example. Yeah. But do I worry that those people will not have a job? No, because this is pretty skilled labor force, and they can, and the question of the whole electrification of the automotive industry and where the companies will be, it's a big question mark still. Yeah, so we just have to watch that, and I do not worry about the concentration risk because we are managing it and dealing with that pretty well so far. Yeah.
Okay. Snow. Okay.
Just one question on the Czech Republic. You said you have everything, but you don't have a bank tax so far.
Thanks God.
Yeah, you have something similar like that with this infrastructure fund. Maybe you can give us an update on this fund, and if some discussion on bank tax reappears right now as you see the Slovakian friends increasing their tariffs.
Thanks for the question. I was expecting that. Yeah. Anyway, look, we are very active because we do believe that this infrastructure investment fund, national development fund, is the good thing to have. Yeah. We do miss the financial tool for supporting the long-term investments into a prosperity areas of Czech Republic, like digital infrastructure, like transportation infrastructure, like housing infrastructure. That's why we initiated the debate with government. I think they are pretty reasonable. I talked already about the relative political stability, and it's now in a way of preparation. This should be regulated fund, so we are picking up and discussing with the government who should lead it in order to be really professionalized. Then we will apply for the license within a Czech National Bank, and most importantly, we would like to judge the typical projects for that kind of fund. So it will take a couple of months. I do believe that while trying to establish that, there will be not heavy discussion about the banking tax, but it may before any kind of elections coming from the populistic parties. I am not fooling myself, but the execution again will be very critical. Yeah? If we will manage to go through that, so far I see the reasonable discussion with the government. It may turn, but I do believe that this is the right thing to do, as opposed to taxing any sector especially, and just eating it. I like the long-term investments is the right things we should do, and we are pretty successful in even touching the legal side of that, because we now see the law for the digital ID coming up, and this will help us potentially as well. So I'm pretty optimistic, but no one knows. Once if it's not done, it's not done. Yeah.
And it continues that contributions to the fund don't have to be expensed, right?
Yeah, this is the, and I have to say that we initiated the discussion as the 4 major banks. However, the fund will be open to any other industry as well. If we talk about digital infrastructure, I can understand that the telco companies will be interested to invest into that. Yeah, so it's not closed just to one sector. Yeah, however, yeah, it should be an investment with the decent payback, and then we should circulate the money as well as from European funds, and those kind of funds exist within other countries, so we are not reinventing the wheel. However, it's within each and every country slightly specific, so we'd like to find our own Czech way.
Maybe others can copy that, huh?
You mean Slovakia? Yeah.
For example.
We already offered. Joking.
Okay, any further questions to this panel? It's Thibaut over there on the left.
Ah, yeah.
Thank you. Yeah, just more like a question for Slovakia, actually, which I've noticed pricing in the market has been almost crazy when you look at the, also compared to the other countries in the Erste remit. What would it take for the sector to behave more rationally on lending pricing, more generally?
I understand now you ask mainly on mortgages. Yeah, you're right. This is the market where you have 17 banks fighting for relatively small group of clients. Because as Tomáš said, in Slovakia, it's the figures is similar. It's 25% people has loan, the mortgage loan, and based on the fact that at the moment the mortgage loans are one of the few products where you can buy clients from another bank, and some smaller banks are really running against the time based on the whole macroeconomic behavior, and they are trying to increase their number of clients through acquisition of clients mainly through mortgage loans, and you can see we managed quite successfully keeping against other banks the bank more profitable and keeping the clients with us, and we are keeping even also our market share. Our market share on the total loans is for last 2 or 3 years at the level of 22.1%, which is good. But I cannot change the actions which are taken by my competitors.
Any more? That's a no. Okay, thank you, gentlemen, and we continue. Let's come without this background. Okay, we continue our journey through Central and Eastern Europe with Romania, and I ask Sergiu Manea to join me. We keep it? Okay, let's keep it.
The ladies move the table now.
It's an afternoon workout. Anyhow, well, I mean, we have. If you look at Romania, if we started with the economy, I mean, you just look at the numbers. I mean, it looks brilliant. I mean, you have the highest growth from a low base in terms of GDP per capita. As we know, you have increased it 8-fold. But I think you have a little bit of a different view on the whole thing. We heard it in the morning from Bernd already. I mean, you say that we have to turn basically the reported GDP growth into something more tangible. Maybe you can expand on that.
Thank you very much. First of all, welcome on my side, although very late in the day. I think that the ones who are still patient and watching us live, congratulations for being resilient. I'll try to go a little bit through the question which came from Thomas, because obviously one can say, okay, Romania is a great macro story, and I think I heard that from many people until like 2-3 years ago, and then everybody started realizing, oh my God, but maybe this is on steroids, right? So listening to Thomas, I thought I remember Ben Johnson, if you remember that 100-meter run. Well, it can be like this, especially in the past 1 year or so. The debate and the noise regarding the fiscal stimulus and legislative stimulus, which actually leads a boosting consumption, was making headlines. And in fact, to stay factual, Romania actually is only second to Cyprus in terms of the worsening of the twin deficits in Europe today, if you have a look. Now, is this something which kind of creates a huge amount of, let's say, concern? Obviously, it creates concern, but not a huge amount of concern, because I think the realization across the deciding factors in the country and across the private sector, I think leads to the conclusion that now everybody is aware and that we are going to witness a gradual adjustment. A gradual adjustment will have to be anchored in actually the strength which was developed by the Romanian economy since the EU accession. So I'm not going to bother you too much with the 800% increase from 1995 onwards. Probably Romania at that time was in a worse situation than Vienna was 200 years ago. But what I will mention a few interesting indicators since 2007. Since 2007, the number of Romanian people which were at the risk of poverty, so around the vulnerability line, decreased by 2.8 million. So from 60-something to 38%, and not only because they left the country, but just because, in fact, the standard of living driven by their ability to work and make money was there and is consistently there. The second interesting point, as far as I'm concerned, is that, and I don't look at averages, I'm looking at contributions, the share in the global export of the Romanian economy grew in these 10 years from 0.25 to 0.40%, of course. That compares with Poland, which is at 1.2, and that compares with Czech Republic, which is at 0.8. However, the dynamic in these 10 years was probably the most aggressive in our, let's say, regional peers. Where was that coming from? Well, it was coming from machinery and technology. It's a surprise, right? From 10 billion to 32 billion share. And it came from IT&C, from 1 billion to almost 6 billion share. And the dynamic and the way these sectors are producing is quite encouraging. If you look also to the fact that Romanian agriculture today creates an average yield 90% of the EU average, right, on different type of crops. And if you look at the logistic chain which has been built in Romania across the Danube and going to the Black Sea, making Romania a direct exporter in Near East and Middle East countries, you see there is strength from a sector which is often under, and actually not even mentioned, I don't want to say undervalued. So I think all these actual gains are giving me confidence about what's next and how is this gradual adjustment going to be supported. And the gradual adjustment means actually revise the growth mix, right? And going away a little bit from consumption, moving into the investment. And then we can go into the labor market and so on and so forth. So I'm confident that we will get our act together in terms of setting priorities, and I just mentioned value-added services. I mentioned agriculture. I manage resource exploitation. Don't forget, Romania sits on the largest natural gas reserve, and because we are not able, from the legislative and project management perspective, Deep Neptune is still not yet started as a development. So all these things combined with the EU funds, or the availability of the EU funds, and most likely what is going to follow a restructuring of the administration, give me strong confidence that we'll be able to sail through a potential soft landing scenario, which I expect, but emerging out of it stronger.
Thank you, Sergio. It's very encouraging to hear. Let's move to BCR. You had some really tough years earlier in the decade. Like a year and a half ago, you basically returned to growth, and in terms of volume growth. And now if we look at this year, you are expanding market shares again. I think that's looking also pretty promising. Maybe you can tell us a little more.
Yeah, sure. Thank you very much. First of all, I'll just briefly through the industry context. Industry looks much better than just 2007. Obviously, no reason to doubt or actually to be surprised about that. But just few numbers from a loan to deposit ratio solidly above 1, so in the area of 1.3, 1.4. Now the industry is 77, 80. I think it's very important to also say that the capital adequacy and the capital solvency at the level of the system is running around 20%. And last but not the least, that in the last 10 years, there are only 34 banks in Romania left out of 42. Obviously, still too crowded, concentration of the bank assets still in the hands of the top 10, 85% up from probably 77, 78, 10 years ago. Now, in this context, and probably your attention has been drawn already by the corporate market share, which Bernd mentioned in the overall picture, and then Ingo as well. You saw probably that the non-performing loan resolution in BCR actually took a little longer than in the group. So the low end of that was, in fact, 2016, right? To give you briefly the explanation also on the corporate market share, to anticipate a question, or one of your questions. From 2015, in fact, until now, we took out another 3.8 billion of non-performing loans, which is 3.4% in market share equivalent. And we also voluntarily reduced some of our exposure on other sectors. So our objective in BCR was to definitely build a fortress balance sheet, which will enable them to expand. And for us, it's not about market share in individual products. It's about actually the share of primary clients. And we define primary clients, as you heard during the day, as clients who really bank with us and they really put their financial life into our hands. And there are ways to measure that, definitely. And also, it's very important that we always try to understand if we are a primary bank for our customers. And we do that by talking to them continuously, and we do that by investing in our processes. And we're doing that by following a very simple receipt. It is about the reach and about the content. And inside the reach, it is about the quality of interaction, and about how that interaction combined with the content becomes meaningful for our customers. That's the reason for, at the beginning, we invested heavily in our processes. And now we are starting our digital transformation journey. And that digital transformation journey is not basically anchored exclusively in George as a front end, as the virtual front end, but we are creating digital processes which then are being used by our people as well, because digital transformation starts with the way our people are digital and financial educator and ambassadors for the bank. And this is the result of it. So we are not targeting it, this is the result of it. And our Success in terms of customer, if you like, aside of the satisfaction is measured how many households we touch, how many companies we touch.
Let's talk a little bit more about digital maybe, because you have George for around about a year now. Can you tell us what difference it made to you? Because I think it was quite substantial.
Yeah, it made a huge difference. You know, BCR was perceived as quite a boring bank, right? So in October last year, in August last year, when we started the pre-campaigning and the kind of the teasing, and then actually people realized that we can throw great parties. And what I can tell you is that we didn't spend lots of money on those parties. That's the most important thing. So it was a wake-up call. I can tell you for a huge number of people in BCR, firstly, because we had the launch with friends and family, lots of discussions inside the bank, it was like they were discovering the bank and what we can be for the first time. So George, huge impact was first and foremost on us, on me, on the people I'm working with every day, no matter where they work, in back office or in a branch in the north of the country or in the head office. That was huge. That was basically creating, combined with the way the customers received George and the way we engineered the deployment of George, again, people planning, then interventions, support in the call centers and everything, actually gave our people the confidence that we can win. And this is what's happening since. We don't see George only as a front end to answer to a question which was raised a little bit earlier in the morning. We see it as a way of interacting. As our people in the branches are the ones interacting, as our call centers are the ones who are interacting, as our machines are the ones who are interacting. At the end of the day, look, I'm living in a country where 81% of the households have access to Wi-Fi. 76% of the people have smartphones on average. Some of them, they have two. But the point of the matter is 7% of these people are really actively interacting in purchasing and purchasing services on the internet. So our job here is, as I said, in the light and with the wind of George, is to create digital awareness, to create digital availability, to create digital education in the sales of what we started 2 years ago in terms of financial education. So, in a nutshell, starting from that point, we started our process. And we said, okay, we have a very nice front end, yet our processes are still slow. So what do? We created business cases for product life cycles and clients' event cycles. So we decided to digitize journeys end to end, to the core. So we started in May, the first digital lab. In September, we had the MVP in the market with a consumer unsecured end-to-end. Now we are originating to the tune of almost 100 consumer unsecured per day in the digital way. But it's not only in George. It's the same digital process which is being granted to our branches. So to answer to a question which was implied a little bit earlier, yes, our branch people today are opening accounts or are granting consumer loans on a digital process. On the customer smartphone, customer iPad, our iPad or tablet, or on our console. So this is it. Last but not the least, Advanced Analytics Lab is giving the first MVP in 2 weeks. We are very confident that we know now how to engineer functionalities and also how to put brains on it. Our objective is very simple. Be close to the customers and make banking easy. If we do that, we'll be very credible in delivering financial education and financial health.
Thank you, Sergio. Thank you. And now we move. I think now we move on with Radovan Jelasic from Hungary. Good afternoon, Radovan.
Servus, Tamás.
Szia. Well, we have found actually a very fitting title for Hungary, the comeback kid, because Hungary seems to be standing before the abyss like 30 years ago, 10 years ago, and it always seems to come back somehow before something bad happens again. I'm not saying now something bad will happen, I hope not, but maybe you can tell us a little bit more about how the economy developed over the last 10 years or so, because I think it's quite a remarkable turnaround that we have seen.
Joined the bank in 2011, and I still remember my first Investors Day in 2011. Actually, that was the last in such a form. And actually, it's nice to be now again in a similar setup, hearing nice and encouraging words, not only from the colleagues here, but also from the investors. Hungary is a real comeback hit. You all know, you all noticed, you all are praising the country. I'm of course, very pleased about that one. For several reasons. I mean, if you look to the underlying macroeconomics, if you look to the budget deficit, if you look to the public debt, if you look to the structural reforms that the country has taken, such as education, such as competitiveness study, they just actually published now 330 points. This is what they're going through. If you look to the level of FDIs, last year actually we have reached some 7 billion euros, which is approximately and close to 6%, 5 to 6% of the Hungarian GDP. So all of these are definitely very, very positive results. If you look to the Hungarian Central Bank taking a lot of unorthodox, proactive measures in order to start boosting lending, let me be frank, even I mean, a lot of other people were a little bit skeptical, and we were very pleased when after a couple of months, we knocked on the door and we said, oh, can you guys repeat maybe this growth, lending for us? And can you come up with some other similar things, I mean, how to boost the economy? So I think all in all, Hungary was able to get back. The price was high. We paid part of the bill. It was not a very pleasant one. But I mean, now Hungary is moving really on a concrete, on a completely different trajectory in the future. And if somebody, of course, as Hungary is doing better, we are doing better as well, and we are benefiting from that one as well.
I think if we talk about the economic turnaround, I mean, you obviously have to talk about the turnaround at Erste Bank Hungary as well, because I think it was equally remarkable over the last couple of years. I mean, when we think back 10, 15 years ago, we know about the Swiss franc issues, we know about the dependency on intragroup funding, etc. I think this has changed a lot as well. Maybe you can expand on that.
I mean, in 2011, more or less, the Hungarian bank was a Swiss franc mortgage lender, more or less a monoliner. And as you can see, we owed to the headquarters some 4.8 billion euros. And you can also see that's our loan-to-deposit ratio was 209%. So you just can imagine my popularity whenever I came to Vienna. They were just waiting when are you going to give back the money. I mean, compared to that one, definitely we tried, just like Hungary, rebalance, so to say, our entire business model. Not only loan-to-deposit ratio improved, but we are trying to balance, so to say, corporate and retail. Within retail, substantially increase unsecured, to some extent reduce secured. This was also something that's helped us, so to say, to keep the NIM still at the level of around 3%. Substantially increase the fee revenues. We are one of those countries that is, as far as look to the fee share, is around 40%. Yes. Financial transaction tax is included, but even without that one, we are strong, so to say, above 30%. We have the highest share of clients that have an investment account of approximately 14%. We are the ones that are having asset management, which is approximately half of our balance sheet. So we were able to increase a strong growth there as well. So once more, what we are trying to do, standing of couple of pillars, to make sure, again, that there is not a single business that if it falls out, that would shake us as much as we were shaken, so to say, in 2011. And I think this gives us a certain level of comfort looking forward, that Hungary is not going to surprise everybody again, as we were actually a negative surprise in 2011-12.
You have eaten my lunch, basically, on the fee question, which is the next one, but maybe we can still talk a little bit about it. I think we've heard about the importance on group level, how important it is in the low interest rate or negative interest rate environment to move a little bit more into the direction of fees. Mm-hmm. You have answered already part of it, but maybe you can tell us a little more. What's behind the strengths on the fee side in terms of Erste Bank Hungary?
Maybe just really to emphasize one number which is not a part of the presentation. We were looking through, quarter by quarter this year about operating income. And I just asked my colleague, can you just remind me what was the total operating income number in 2016? So we realized basically that after 3 quarters of this year, we are already above where we were at the end of 2016. Yeah? So with 110 billion forints, we are already above, so to say, the operating income in the entire year of 2016, and we still are confident that we will have a really good last quarter of this year. There are 3 main reasons behind that one. First of all, yes, we are lucky because the country is doing better, and we are, so to say, riding that wave. So every time when we are discussing here with the colleagues the KPIs and the bonus, I can tell them, listen, this is where you are right. I mean, we are riding, but I mean, let me give you the 2 reasons while I think we were doing a pretty decent job. The second reason why we were able to increase our operating income is acquisitions. We acquired already in 2013, 2014, BNP Paribas Private Banking. Then we acquired Citibank's retail business. Then actually we just closed and we are just transferring now a building society portfolio from Aegon. So basically, again, in addition growing with the country, we were able, again, to acquire. And third, last but not least, I think where it is very important, we changed the mix of our revenue income. Our share in mortgage loans came down by approximately 4 or 5 percentage points. Our unsecured basically doubled during these last 5-6 years. And again, with this combination, we were able to increase substantially our operating income during the last not only 3 years, but continuously. And we do hope that this gives us a healthy and stable potential during the last couple of years. Last but not least, really just one more number, we were also able to double the number of our active clients in Hungary, while just like Peter Goszek mentioned, just by lowering the number of branches in Hungary as well by half. So from some 200, we came down to approximately 110, 108 branches. And last but not least, I think where we are very confident regarding George, that we have the most digitally active client base in Hungary. 54% of people were digitally active of our clients during the last 2 months. So we are looking forward to be a part of the George family as well.
A very fitting last words. Thank you very much.
Thank you, Thomas.
And I would ask Christoph Schöfberg. From Erste Bank Croatia to join me. I think we'll start with the economy as well. I mean, you also had a pretty long rough patch in terms of economic development from 2009 to 2014. In 2015, 2016, things started to go really well in Croatia. Maybe you can tell us a little more of what happened and what you think is going to happen in the next couple of years.
You're indeed right with this very long waiting in the recession. It was actually 6 years in Croatia, until 2015 to be precise. I think there is a bundle of things that happened at the same time and factors that improved the situation significantly then. First of all, of course, Croatia entered the European Union in 2013. It took about 1-2 years to get on grip in the economy, to get on hold of the funds that can be attracted for infrastructure and other projects, and that happened. At the same time, the government started a strong consolidation of the fiscal situation, which was pretty bad. There was an 85% roughly public debt ratio, and they managed in the last 3 years to run balanced budgets as well, even with slight surpluses. So they are now down to around 70, and the plan is in 3 years to be at 60. At the same time, tourism, which is, most of you will know, is a major economic factor in Croatia, I think also started to take off. It was always known as a tourism, but more as a mass tourism destination. It's a beautiful country, you should all see it. But the country started to develop quality tourism, so hotel investments and other investments into tourism. So at the same time, there was also a lucky factor because some other countries fell out for political reasons, and so the growth rates were around 10% each. So we have now around 100 million overnight stays per year, around 10 billion of revenues from tourism alone. So this is the area also where the bank is placed well. These are our customers because most of them are SME customers. So overall, I think there is now one more factor, I think, which will play a positive role, which is the Eurozone. Croatia has applied for last June. Croatia will take over the EU presidency as of 1st of January, so they do hope they will get into the Eurozone relatively quickly because technical criteria are fulfilled. There is a small other factor, which is called politics, and I think this might still take a couple of time, but we do believe that this will happen sooner or later.
That sounds very good. We've titled this presentation Leading in Customer Satisfaction. So let's talk about Erste Bank Croatia and why this is the case. I think your market shares are also expanding quite nicely if you look over the last 5 to 10 years, very consistently as well. And also the customer satisfaction ratings are extremely good, probably the best in the market, I dare to say. So tell us a little more, give us a little more background about this.
This is where Croatian team, I think, is especially proud of. We are actually #1 in customer satisfaction in all client segments, vis-a-vis our other top-rated competitors. So both in private, in micros, and in corporate SME. But this is, of course, only the consequence of what we are doing. Basically, the Erste Bank in Croatia was founded as a number of smaller regional banks that actually were merged a couple of years ago, many years ago. The market share was around 4%, 5%. Then with the last merger, went to 9%. And up from them, we did it organically. So we are now at 16% overall. We are in corporate 20%, in SME probably even closer to 25%. So basically, this is probably the challenger mode that is still in the DNA of the employees of the bank and the management, I hope as well. That is really driving and putting us still in this acquisition mode of good clients. Combined with that, I think we are also an innovation leader, so we are heavily preparing for George 2020. I think that will be great for the country, for Erste Bank in Croatia, and the clients, because it fits so perfectly into our image and reputation. To warm up, we already did a small application, which is called Hex Pay. It's a perfect complementary to George. It's a peer-to-peer lending tool. It's a micropayments feature, which is actually used to attract retail clients. And in the first 10 months that we have it as an app, we gained around 75,000 users, roughly 80% of them non-Erste clients. So this is a perfect tool to bring clients closer to the bank, and then later we hopefully will bring it also to George.
Okay, as the final question, it's a little bit of a different question from the other ones. You are also operating in Montenegro. I think we've bought the bank like 10, 12 years ago, something like that. And tell us a little bit more why this makes sense. What's the business rationale behind the whole thing? And tell us maybe a little bit more about Montenegro itself.
Montenegro is a very small market. I think some of you will know, some of you not. It basically has the euro as a currency. Yeah, it's interesting. It became a NATO member last year, so it's of course has applied for European Union membership. It's a very small country. So the reasons behind exactly 10 years ago to enter that market was, I think, a courageous step, because that was 6 months after Lehman. But since it was a very limited operation, I think the bank entered the group, and also Croatia, it's governed out of Croatia, into that market. At that time, the bank had around 4% market share, around 20% NPL ratio. So today we have around 14% market share, 3.5 times more, 17% market share in retail, and we have an NPL ratio of 3.7%, below 4%, which is for market Montenegro, I think, sensationally well. The bank has been nominated a couple of times by the FT Best Bank, and actually it's the same, it's very similar principle. Yes? So be very customer dedicated, very strongly also governed from the Croatia, so say from the bigger brother in a way. So the whole risk know-how, compliance know-how, everything is also transported to the country. We have a great team there in that small bank, and I can say it's probably definitely for Erste Bank Croatia one of the best investments, because 10 years ago it was bought for an acquisition price which after 10 years has around 4 times already come back through the profits being made. So never any year without the profit in that country. So I think it's a perfect story, small scale, perfect story what you can do in using opportunity and customer satisfaction in a good way.
Thank you so much, Christoph. And now we go to Serbia, final hooray.
Thank you.
And we'll lift the veil on all the secrets of Erste Bank Serbia and all the successes which we did not talk about in the last couple of years. So let's talk a little bit about Serbia, the organic growth champion. That's the title of the presentation and the talk. And let's start with the economy, because I think similar to Croatia, your economic development has been quite good since 2012. Let's start there and then let's move to the bank.
Oh, you know how enthusiastic about Serbia I am, and thank you for building up suspense and leaving me talk last. So I have 1 hour to talk about Serbia, right? Okay. Well, Serbia, as you can see from the slides and you know from the story, it's a success story for the past 15 to 17 years. I came to Serbia back from Western Europe, where I lived over a decade. And at that time, Serbia had average salary of 60 Deutschmarks. Today, November 2019, average salary in Serbia is 500 euros. So Serbia really managed to grow tremendously since 2001. As you can see, from 2006, we've managed to grow impressively. Past couple of years have been continuously growing in terms of GDP. So 2018, roughly 4%. 2019, we will end up also very close to 4% forecast. 2020 is again around 4%. So we have a continuous GDP growth on the back of which, or on the wave of which, we are growing as a bank as well. Where is this GDP growth coming? Mainly from foreign direct investments, according to Financial Times, and we heard David asking you if you read it, and I heard a lot of yays here in the room. Financial Times actually appointed Serbia as #1 FDI destination globally as recent as August this year. So the number of companies coming into Serbia in the past years is impressive. Investors are coming from Germany, from Austria, so we have brands such as Bosch, Siemens, I don't know, ZF, MAN engines, which are coming into Serbia, incepting their production facilities. So FDIs and basically increase in consumer powers are two most important driving factors that we see from the macro, and they're also relating to our business in Serbia.
Excellent. Slavko, one great story next to the economy, of course, is Erste Bank Serbia itself. I think we bought it in 2005, or Erste bought it in 2005, and it was still called Novosadska Banka, if my memory is halfway correct. And back then, it was a little regional bank around the Novi Sad area in the northern part of Serbia, and had a couple of branches which were outdated, and you had, I don't know, market share of 1%, 1.5%, if you were lucky, 2%. I mean, today it looks a little different.
It looks quite a lot different. As you can see from the slide, we've grew 13 times since 2005. We managed to obviously expand our footprint, going beyond Novi Sad and Vojvodina borders, and we are basically a bank that covers entire territory of Serbia. We managed to, or actually we decided to focus on a long-term relationship with our clients, both on the retail side and on the SME side, growing our portfolio, growing relationship, creating partners out of our clients, making sure that we fulfill their long-term needs. And in the past years, we can see it pays off because of those relationship, we are growing in all sorts of ancillary businesses. We are growing our balance sheet, and we are growing it in a healthy way. I want to point out that not only we grew in the past 14 years, but we also we grew in a healthy way. We're running a bank which was not growing to the detriment of profitability. We were, for the most of the years, printing return on equity above 10%, so double digit. And at the same time, we have a bank with the smallest amount of non-performing loans in the country and one of the smallest in the group, which is around 1.4% today.
Thank you, Slavko. And the final one on IT, the IT quantum leap. You are doing something very aggressive that nobody else in the group does. So let's talk about the big core banking system change, you moving, throwing out all the old stuff basically and moving to the Temenos platform.
That's true. I had a lot of questions during dinner last night and today during breaks. Why is Serbia the only one actually doing the complete landscape change? Reason is pretty unique. Serbia, or actually Erste Bank, acquiring Novosadska Banka did not keep the legacy IT system. We actually borrowed resources from Croatia, and that borrowing had its limitations, and now we have to repay that borrowing debt. So now we have investment debt that we have to repay by investing into a completely new IT system. We are happy to be, in a way, a pilot in the group. So we'll see how our investment is going. Right now, we are already in the implementation phase. We are expecting to see actually deployment mid next year in terms of going towards testing and migration, and actually the full turning on the switch in the first quarter of 2021. So we are looking forward to that, because this will create out of Erste Bank Serbia the most modern bank in Serbia, the most modern bank in terms of digital capacity in Erste Group, and it will allow us to actually ride a new wave that we are seeing only as a glimpse right now, which is a digitalization of Serbian clients, similar to what we heard from Sergio in Romania. We have single to start of double-digit number of clients using digital apps in order to approach their bank, but we are seeing this trend increasing dramatically. So by the time we come to the market, we'll be able to ride that wave and to offer to our clients straight-through processing and fully digital services.
That sounds great, Slavko. Thank you very much.
Thank you very much.
And I would ask you to stay here, and the colleagues from Romania, Hungary, and Croatia to join me again on the stage to do a last round of Q&A, please. Das Mikrofon. Dame in der Mitte.
Hi. How do you see the market structure and level of competition developing in each of your countries? And could the markets become more consolidated, for example, more concentrated, or quite the opposite? You see more new entrants coming? Thank you.
Okay, I'll start with the smallest country, saying that consolidation is ongoing in Serbia. There have been quite a few mergers in the Serbian banking sector in the past couple of years. Actually, quite a lot of, or almost all Greek banks have left the country. SocGen also sold their operations in Serbia to OTP, and right now tender is open for second largest bank, Komercijalna, where there are 3 contenders that are going to bid. I think the bids are due early December. So that would lead to a much higher level of concentration in Serbia. and obviously we do see threats and opportunities from that situation.
In Croatia, the top 3 banks, including Erste Bank Croatia, have more than 60% of the total banking assets, so it's a clear consolidation already have taken place. All the other banks are much smaller. As a matter of fact, we do see a continuation of the trend most likely, because there's still some smaller banks, which most likely I think will also time after time disappear. Fintechs have come in. So far we are quicker than the fintechs in services, in bringing up services. So I do believe that around these top 3 banks, 3 to 4 banks, I think there will be the major play of the future as well.
We are one of the consolidators in Hungary. We want to be in the future. We want to strengthen this position. We want it, but this is only 50% of the story. Now we have to wait for the other side. As you can see, during the last 3-4 years, we were interested not only about banks, but some other financial services. I think we will continue sniffing around and look what fits into our, so to say, profile. And yes, I think if something has Hungary proved during the last 3-4 years, this is the capacity and the ability to acquire, consolidate banks, and basically go to the next growth level. Again, we are there knocking on the door. Hopefully somebody will hear it.
In Romania, as I said, top 10 banks own 85% of the total banking assets. I believe consolidation will continue. We still have 34 banks in total. Our aim is, again, as I mentioned, to reach as many households and as many companies in taking care of their financial services. So this is how we are going to deliver our part of the consolidation.
I have 2 questions, one on Hungary and one on Serbia. So first on Hungary, we could see that you have a quite strong performance in funds and in fees. My question is, so for a while there are these government bonds yielding 5%, and as far as I know, it takes a lot of new inflows out. Is there any strategy how you could tackle this headwind on the fee side? And on Serbia, I'm not sure you can answer this, but so you talked about the core banking platform and Temenos and that you're piloting. Should we expect that if it's successful, the whole group could actually implement Temenos? Is this the goal? Thank you.
If you cannot beat them, you should join them. We are selling also the Hungarian government bonds. Thanks God we are getting some fees on that one as well. We see that this flow into the Hungarian government bonds that they started issuing some 4 months ago with an average interest rate over 5 years of approximately 5% is in some months decreasing the level of purchasing investment funds, including our investment funds, but it has been minimum. We see that's mainly where the money is coming from, and that is going into these Hungarian government bonds. This is basically from current accounts and from the existing government bonds. So basically, third existing government bonds, third current accounts, which means that's the deposit on current accounts instead of growing like this. They are now growing like this one. And we do see again that there is a minor outflow, at least what we have seen during the first 4 or 5 months, but we are definitely rewarded much more from the government by selling the government bonds because we are getting again a nice reward. So all in all, we see our fee income, partly also thanks to the Hungarian government bonds, actually increasing and not decreasing.
On core bank system change in Serbia, it is now our number 1 priority. We are focusing to make this project successful. Obviously, once we complete the project, we will have quite a lot of know-how and experience within Erste Group in terms of managing Temenos. Whether there will be some other banks to follow, that would be management decision that will be taken at that time.
Hi, thanks very much. Actually, I have a question for each of you, if I can, hopefully quick ones. So first for you would be, why haven't you made a bid for Commercial? Why haven't you decided to take that opportunity? For you, it would be, I was surprised that your balance sheet is roughly the same in Croatia as in Hungary. Your margin's the same, but you're not making as much revenue. It seems to be because your fee generation is a lot lower. Is there anything you can do there to improve fees in Croatia? In Hungary, I'm interested in any, the impact of this Aegon merger in terms of deposits or revenue, and then Romania, just the outlook for margin.
So, first one was for Serbia. As I mentioned, we decided a year and a half ago to go towards digitalization of the whole bank, going into a very heavy and impactful project, and basically going into a due diligence and contemplating merger with another bank at this point in time would have meant that we would have to stop or at least jeopardize heavily the project. So that was the main reason why, together between holding board and executive board in Serbia, we've decided we have to pass on that opportunity because our focus right now is to digitalize our bank.
Your question on Croatia, I think you're right. We are sharing roughly the similar balance sheet size like Hungary. Still, Hungary is doing better on the fees, but this is exactly the potential that we see also in Croatia, because we will focus, what we heard earlier also today, a lot on bank assurance and asset management products. We are doing fine on fund management already. We have 25% market share, but if we want to leverage this now as a bank also to increase the fees. So I see this exactly as an opportunity to increase fees over time.
Sorry, I did not get your question.
Yeah, just what the impact of this Aegon Building Society acquisition will be, if share any.
It's great potential. I mean, we are taking over some 45,000 clients, 60,000 contracts, building society contracts. Of course, we are trying to sell them full services that our bank is offering to the clients anyway then. Yeah? And probably the next couple of months, weeks, we will see, if we are able to turn any of these clients, so to say, into active clients. That was not a part of our business plan. We did not put that into our numbers, but we are confident that we would be able, so to say, to charm those clients and attract them to be Erste clients as well.
Well, you've seen our margin develop positively this year compared with last year. Obviously, we take somehow advantage on the liability side, but in the same time we are changing slowly the mix of our loan portfolio. Corporate segment will continue to stay depressed because the size, let's say, of the eligible for credit according to our risk standards, companies remains limited. While it's on the retail side, we are also developing our, let's say, consumer unsecured credit, more like cash flow kind of products for our customers. Obviously, the question is, how are you going to be able to charge, right? So we are going to be able to charge because now we are able in any type of channel to offer a consumer loan in 10 minutes or less. We are now able, also on the liability side, to open a current account in 7 minutes, wherever that takes place, in mygeorge.ro or in our branches. So the ability to offer superior service and actually save time for our customers make me believe that we'll be able to charge to the eligible customers, I underline the word eligible customers on the credit side, something which will be rewarding and will enable our positive development. But I don't expect a massive change.
But a slight improvement is possible.
Yes, it is possible, but it's, again.
Okay. Any further questions to this panel? That's one more, yeah. It's over there.
I have two questions. First on Hungary and then secondly on Romania. On Hungary, could you perhaps talk a little bit about your expectation in regards to the subsidized baby loans product in the market? I understand this is a fairly new product and demand so far has been quite strong. how much is your loan growth, volume growth dependent on the initiative for next year or for next 2.5 years? And secondly, in Romania, we've seen, I think, the cost-income ratio around 49-50% in the last 3 years. We are seeing good volume growth, and the margins development actually was also surprisingly positive. I'm just wondering, where do you see cost-income ratio developing in the next 3-5 years? Perhaps Romania contributing to the group, reaching a lower 55%. Thank you.
Actually heard just yesterday in the evening a much better word. Instead of baby waiting loans, I heard it says a baby shower loan, which is, I think, probably politically much more correct. The whole thing started on July 1st. Our total plan for the entire year was already reached after the first 2 months. So whatever we planned for 7 months, we reached during the first 2 months. If I remember correctly, right now, the entire Hungarian market is about 40,000. That has been already extended. After the big green bank, we are basically number 2. We are the fastest one, and again, take into consideration that we branch-wise are number 4 bank. If I take Takarék as one bank, we are pretty proud of our share, which, depending on the month, is basically between 15 and some months even up to 20%. It is completely changing the structure of loans, retail loans in Hungary. It is squeezing out to some extent secured and also partly unsecured loans. But I think, for you, it's important that all in all, the retail loan is increasing in Hungary again. Just to mention, we were 30% before the crisis compared to GDP, came down to 16, just a little bit above Romania's 14%. So basically, just in order to get back to 30, we still have a long way to grow. So again, all in all, it's increasing, the structure is changing, and needless to say, if you look from risk-weighted assets aspect and also if you look from a revenue aspect, this is definitely a win-win-win for both debtors, I guess the state as well, if there will be eventually more kids, and also for the bank.
All right, so you noticed that our costs are flat, bar the contribution to the guarantee deposit funds or resolution fund. We don't plan to change that going forward, so we will stay nominal flat in RON on the cost side. I think what we plan is stay with the 4th digit in front. Our ability to deliver middle 40s is highly dependent on our ability to deliver digital investment and digital transformation across the bank.
All right. Any further questions? I think that's a no. So I thank the 4 gentlemen for answering all the questions.
Thank you.
Thank you.
Thank you.
And before Bernd Spalt joins us here, one housekeeping issue. We have pulled forward the after-event drinks. So whoever has got some stamina left or needs some refreshment, you can join us immediately after the concluding remarks of Bernd, right here on the 13th floor. So.
Very good. Ladies and gentlemen, I hope that we could demonstrate